Open, eben, open, glopen. Hey, good morning, everybody. Hey, it's taken me 20 minutes to get this webinar up and running. I know, right? All right, let me get the chat. Gotta move the chat around. You guys ready for another kick butt week? Another fantastic week to be a currency trader. Just another great week. ISM services before NFP. Gotta love that for modeling. So anyways, I'm ready. It's 9 a.m. So without further ado, let's go. So, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. Hi, nice to meet you. My name is Wayne. I'm a currency trader just like you. Oh, hey, you probably need a microphone, huh? Let me test something. Is this the microphone? Or is this the microphone? No, it is this one. I just wanted to make sure. This never hurts to check, huh? So anyways, hey, nice to meet you. I'm a currency trader just like you. My name is Wayne. I'm a global macro trend trader. I also like to scalp, spot, swing, carry, and everything else. I just love trading. Been trading for decade and a half, probably more than that. I do this every single day, day after day after day. And I am here. The raison d'etre for this webinar is for me to teach you, first of all, how to plan your trades in advance. And for that, you're going to need a bias. And then, of course, once you get pretty good at trade planning, you should become more and more profitable. So I'm here to help you learn how to plan using fundamental and technical analysis, and then how to be a trader, which means being profitable. So your side of the bargain here is to get involved, ask questions, treat your fellow currency traders in the chat with respect, probably take notes, participate, practice, and then, of course, visit tradersway.com, the sponsor for this Forex.Today YouTube channel. Please visit tradersway.com. Start by opening an account. Demo account takes 30 seconds, maybe less. Once in there, download MT4. You can check out the execution speeds, the spreads, the swaps, world-class customer service. And then one day when you are ready to trade real money, hopefully they've earned your loyalty and respect. Hopefully I've earned your loyalty and respect. And you fund that account with real money and make Traders Way the prime broker to your new Forex trading business. Beep. Beep, beep. So has anyone gone on a business planning retreat with themselves? Hopefully so. Hopefully you got 2020 all planned out. Any case, we got non-farm payrolls at the end of the week, ISM services somewhere in the middle of the week. So without further ado, I think we should just jump into technical analysis. Hope says raison d'etre is the reason for being. Absolutely correct. Correctamundo. RJ did in December. That's cool. It's really an interesting experience. Stephen says, no, but I signed up for my first Ironman race. Good. I don't know if it'll make you a better trader. My prime concern is your trading. But anyways, let's just go. Drawing tool, great. Every day I have to start with this drawing tool. All right, hang on. I got to get the stupid drawing tool. Waiting for the drawing tool. Wait for it. Still, oh, popped up on that screen down there. Okay, good. So as you can see, we've already identified a supportive area and a resistance area. This is further outlined by the projected low and high currently based on pivot points inside the resistance. So really now we got sort of an inside trend. Basically, I look at it this way. So inside trend number 1, inside trend number 2, inside trend number 3 is how I look at it. And currently we have price kicking off the top here, which makes sense to us as pivot traders. Down, up, and down if you're trending. But really we don't know if we're trending, correct? So right now all we've identified is a topish area and a bottom area. But if you were a bear, that would be part of an interesting plan, that you're planning on the breakout. But this plan says not till next week, right? So we need a lower low, up, and then down. Okay? Now you might say, well, we're at that price now. Why can't I just sell? Well, it's the same trade, just with more risk associated with it. Okay? Because this is still very plausible to happen. Okay? It's a trendless trade. So I think you should, generally speaking, you should probably pass on this one. Especially if you're a trend trader. Okay. All right. This is Kiwi Swiss franc, and we covered this last week in pretty good detail. Down, 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 up, up, sell, down, 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 up, sell, right? Down, 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 up, sell, down, 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 up, sell, down, 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 up, and then this is sell zone. So this is already tomorrow's trade. Okay? So to revisit this, the logic here, let me redo this one. I'll just circle it, okay? Sell zone, sell zone, sell zone, sell zone, sell zone, sell zone, and sell zone. So if you're trading now, you're trading tomorrow's sell zone. Okay? Because we're not interested in today. Today is what we did last week. So today we're doing tomorrow. Okay? If you're not planning tomorrow, you're already behind. Sorry, it's in there somewhere. Oh. By the way, I'm super excited about 2020. 2019 was a good year. 2020 should be a very interesting year, especially with the election. And I've been meditating a lot during this break. I'm not at Harvard at the moment, and we've had holidays and stuff like that. So it's a good time for reflection. And I got some like amazing, awesome ideas that I'd like to do if I had time. And as we move through 2020, I might get more and more time. Depends on when I finally graduate. But whether it's in 2020 or 2021, I got some radical ideas in my brain that I'd like to make reality. And that's the difference between an entrepreneur and a dreamer. I like to have these dreams, and most of them, not all of them, of course, but sometimes I just do them. So I'm looking forward to some really cool stuff that we can do either in 2020 or 2021. One of the things I'd like to do is meet you in person. Whether it's basic training, advanced trading, a mastermind group, a fundraising type thing. Not sure. Maybe a combination of all those things. But I'd like to do something with you and me, somewhere wonderful in either 2020 or 2021. That's what's on my mind. Like, I could put it down as a goal to rack up at least 100,000 miles traveling in whatever year. You know what I mean? And I'll just go everywhere. Like maybe every other month we can meet up somewhere doing something, right? So anyways, so I'll see you in Timbuktu. All right, let's take a look at pound Swissy. I love London. I was there on a beautiful, warm, sunny day, and the birds are singing and the flowers are blooming. And some people are like, no, you've never actually been to London. That doesn't sound like London. You might have been in a different town. Okay, so what do you think? Big awkward move down. Now we're caught up here. We're not really moving. But we're doing something. Okay. I don't want to be too certain that this is heading down, but I want to be ready if that is my trade plan. Yeah, Montreal. I've never actually been to Montreal. I might have to do a trip to Ottawa in the next year or two. So maybe we can do that, get out of Ottawa and head over to Montreal. How to download my chart templates on a Mac? You would just download them any way you do. I don't. So you've gone to metatraders.com and you're having trouble downloading on a Mac? Yeah, I don't understand that. But Alejandro says this is aggressive. Yeah, it totally is. But it's one of these things, Alex, and when I say aggressive, I guess there's even different levels of aggressiveness, right? Like selling an uptrend is too aggressive usually, right? But this is consolidation, not uptrend. And I'd like to be a bear, as everybody already knows. So I can take a shot here, and how much am I risking? So if I dropped it at 27.80, you know, I'm risking 40 pips, maybe 50, 60, let's say 50 pips. Okay. Oh, hey, by the way, is Jan here? Jan, are you here? Well, we see if Jan's here. I want to thank you for all the testimonials that you left on Friday's video. I think there's close to 50 testimonials. Most of them are very well written, multiple paragraph. I appreciate that. Thank you. I mean, I read every single one of them. I printed them out for my mother. You made my mother cry. So thank you. But anyways, I think it was Jan said that she missed all the yen trades moving up in September. Okay. And then she said she was early on all the December ones. So what's the first thing that we need to be worried about? She's late on the first move and early on the second move. What's happening here? Definitely a timing issue. So I think this is an issue of technical analysis, first of all. Because I say for weeks and weeks and weeks, get ready, it's coming, it's coming, it's coming, it's coming. And in fact, I started the swing trading group on the third week of August to re-emphasize how important that week was. And then it happened. And apparently she didn't do it, and missed it. Okay, so there must be a technical analysis there, or maybe it was just psychological. Okay, so then the next one, right, between Thanksgiving and December 12th, I said, it's coming, it's coming, it's coming, it's coming. And then I guess, what did she do? Short, but it hadn't, she shorted, but it hadn't gone down yet. Or she shorted and then it went up for a few weeks. But then, like, why wasn't she stopped out? And try again, right? Like there's an issue here, I think, with the technical analysis. I mean, the strategy part is there, but you need to confirm or deny the hypotheses, right? And she said she was early in the August move, or no, late in the August move, early in the, right? So it sounds like she's throwing down trades. And the second part that bothered me even more than that was she said that either she lost a lot of money, I think is what's happened. And that's also against the rules of engagement, right? If you trade it properly, you're never losing big money. JT says, you don't have to back test, but you do have to have a forward test. You have to have a plan, right? Well, I wanted to, first of all, I wanted to say to her, to everybody here, you know, if you're in a situation when you're losing a lot of money, you are not trading properly. Like you don't get something. That should be, the way I teach you, should be impossible. So I'd like you to think about what is it that you're doing. Now, the first thought is over leverage. That's probably a big one, I think, with most people, right? The only way you can lose a lot of money is to bet a lot of money. So we got to fix that right away. Like, what do you mean you lost a lot of money? How is that even possible? Okay? The only way it should be possible is you show me you're trading and you have 100 poor trades. Right? You're like, Wayne, I made 100 trades, 70 of them failed. That's the only way. But if you're like, Wayne, I made 4 trades and lost a lot of money, you're not doing it right. Like you're not getting it emotionally or mentally or something. So we need to start there, like reduce your lot size big time. Okay? Then the next part is we need to work on the trade planning. So if you are a bear or you believe the market's going to turn bearish, you can only sell high at resistance in a downtrend. You guys taking notes? Molly says trade 0.001. Yeah, but if you had $10 million, maybe you're trading standard lots or big lots, right? You're doing full yards. Well, that's $1 billion. You're probably not doing a full yard, but you know what I mean? Like, it's all relative. So I don't care what the lot size is, but most likely if you're losing a lot of money, you're not, I mean, just think of it. Let me say it again. If you're losing a lot of money, you're just not doing it right. Just whatever you're doing, it's just not right. Whatever, like, I don't know what you're doing. It might be a combination of things, but you should probably stop doing whatever you're doing because you're not doing it right and you're not getting like major parts of this. So, can you lose a lot of money if you sell high at resistance in a downtrend as a bear? Like it's virtually impossible, especially if you have, you know, lot sizes that are small relative to your account size, right? Contra, I like to have 100 trades open, not 1 or 2 or 3 big trades. So put it that way. I like to have lots and lots of smaller trades versus a few big trades. So let's say I wanted to have 100 lots exposed. Okay? Let's say that's my exposure level. I can afford 100 standard lots. Now, one trader with that same budget, if you will, they'll do, let's say, 10 trades. I would rather have 100 trades or close to it. Because when I'm wrong, I'm a little bit wrong and it doesn't matter. If one of my trading ideas is wrong and I have big money on it, it hurts. So this is kind of what I'm leading to. When things don't go your way, it doesn't hurt you that bad. What if the worst month you had last year was minus 3%? Can you recover from that? Yes. What if your worst month in 2019 was 30%? That hurts, bro. First of all, you'll never raise money. You just threw away your career. I don't know any wealthy person that would give you a 30% drawdown. Okay? You just ended your career. So that's another reason of doing it, right? So I would like to have 90, let's say I'd like to have 90 trades at break even or better. And, you know, sort of like somewhere between 5 and 10, I'm nursing to break even. These are just new opens, okay? And I'm only concerned about these. So I'm only ever doing 5 or 10 trades, but I'm stacking them on top of other things. That's why I'm a macro trader, right? Oops. This is why I'm a macro trader. I don't do things like NFP comes out at 98,000 and I make, let's say, 48 pips and my account is up 5%. Right? Like, I don't do this nonsense. Okay, I'm a macro trader. I trade trends in non-farm payrolls and trends in non-farm payrolls relative to payrolls in other countries, right? So I look at like what's going to happen in the first half of 2020. Do I need to be worried about the US election in the first half of 2020? No. What about the second half of 2020? Do I have to worry about the US election? Yes. Yes, I do. And how will this affect my yen moves? Okay? So I'm already planning that. How will that affect my yen moves? And how will I guide the swing trading group in the second half of 2020? That kind of stuff, right? But the idea is have lots and lots and lots of smaller trades in the direction of a trend, and I created this bias from fundamental analysis. That sounds pretty logical, isn't it? And if, as I was showing you, if I'm wrong and something really horrible happens to my trading this month, right? I'll have like 8 losing trades, negative 8 trades, and then everything else knocks out at break even, right? Or whatever. You see what I mean? But, or more likely locked in profit, right? But I'm not going to like, I'll never put myself, or I want you to think of this way. As a professional trader, you will never put your client's money in jeopardy. Every time you take a trade, you're risking, right? But you're not risking very much. And then when you get that going and you're up 100, 150 pips, you move your stop to break even, or you lock in a small minimal acceptable performance, and then you walk away and you're on the next trade now. And then you do that one and rinse and repeat over and over and over again. 6, 7, 8 weeks goes by. You're like, oh, you got 40 trades open. Cool. Cool. But one at a time, one at a time, one at a time. The reason you don't see that a lot on YouTube and other places is that those quote unquote gurus, which of course they're not, they don't have what it takes to put together a fundamental analysis. They cannot predict the future more than what's happening today, right? And they're probably not even very good at that. So if you cannot make a forecast for the future, there's no way you could trade it, right? So you're limited to your, picking up crumbs. Okay. So anyways, like on the future, right? We know the basics, right? Keep your losses small. Let your winners win. Let your winners run. Okay? So your losses are small, your wins are big. If you're a bear, you sell high at resistance. If you're a bull, you buy low at support. We know these. These are basic building blocks. Elementary, my dear Watson. But there's truth to them. Okay? So that's the long answer, okay, Contra? There's the better answer. That clicks in about 1.5 years after trading? Maybe. It could be a lot, right? More than that. Joe says, Wayne, would you say that a very, very good but purely technical trader has at best a 50% win ratio? No, but that would be enough. That'd be enough. If you had if half your trades were winners and half your losers, you're probably quite profitable. It's enough. But remember, a lot of these moves that we take that are profitable, like we'll take like the swing trading group. Remember, like in September, there were multiple traders in the swing trader group up more than 1,000 pips. yeah, I think it was Peter Ward was up thousands and thousands and thousands of pips for the month of September, all based on our analysis. But the interesting thing is it didn't exist technically. There was nothing on the chart that said it was going to happen, and yet it happened. And then, of course, what I also said is September often has 100% pullback, and that we may have to reset all of those trades. So don't be afraid to take profit, but you're going to have to make a decision. Sometimes it doesn't pull back a lot, but much of the time it pulls back a lot, at least 618, sometimes more like 100. Once again, that didn't exist technically. That was a combination of fundamental analysis to set up the first move, but also 20 years of trading experience. I knew that September would have an explosive move, but a very serious and significant pullback, and then continuation of that trend, right? So a lot of that is not technical analysis, but to be able to trade it with as low risk as possible, you do need technicals, right? So with technicals, you're looking backwards to predict what's going to happen today. But what happens is you miss tops and bottoms because they haven't occurred yet. You see what I mean? You're looking at tomorrow and last week. So the new top and bottom is more difficult to predict if you're only technical analysis. And which means, I mean, if you're very, very good, there's warning signs. Like these things are not surprising. They're only surprising to new traders. So they're not surprising. There's lots of red flags that let's say the current uptrend is about to wane. And a very, very good trader that lacks sort of greed and fear, they say, okay, this was a good run. I got the full Monty, let's say an M2 to R2. Great. They take the money off the table, expecting some sort of retracement, not fundamentally, just simply because of what's happening on the charts. That's cool. And they take their money away. But now we're talking about what? 1 or 2% of all traders have that capability. That they just made 300, 400, 500 pips on a good trade, beautiful technical trade, and then they take their money and walk away. Most people are like, oh, but what if it goes farther? What if it goes higher? Oh, I can't get on unless I make exactly 300 pips, right? All that kind of stuff. A really, really good trader doesn't need all that. They're like, okay, that was good. I got the full Monty, right? Now the rest, technical analysis can't predict. So they take the money off the table. Sure enough, that's what creates the significant pullback. But most people, they don't get out. What happens is at the top, when they're supposed to be, culling their own herd, they're supposed to be getting out of their winners. What happens is they put 1 or 2 or 3 more trades on. Or even worse, now they miss the bottom of the move because technical analysis, again, doesn't tell you until it's after it's happened. So then you get into the trade halfway through the trade, and then you load the boat at the top because you expect more because, again, you're relying 100% on technical analysis, and maybe you're missing a few things because you're not that good, or maybe you're just greedy and you throw down much more. I mean, why not? You got 5 or 6 winners now. Why not go big? Well, the problem is you don't go big because you missed the first half. You got the second half, and now you're loading the boat at the top, and of course there's a retracement. And that's the cliche. That's what most people do. Now, and then pure mathematics is most people hedge in that scenario. That's terrible. I would never recommend that. That sounds like someone's getting married to their trades. They can't get out of the trade. Why? Why, you got pride attached to the trade? Just get out. If you need to hedge, just take your profit. But the best hedge is you take the money and you stick it in your pocket. Now, the caveat to that is if you're in a very, very good carry trade, but then I would do that differently. I wouldn't do like what you're saying is like a pure hedge where, you're long something and then you sell it at the same time to offset and keep yourself in that position. That's not what I would recommend either. I'd rather you get a complementary trade, that has a high correlation, and I would make money on that trade knowing that you're offsetting the losses on the carry trade, and do it that way versus just sort of locking in at some weird price, right? So I'm not saying this is you, but many people, if not most people, if not everybody, close to everybody, maybe not you, but everybody else in the world, in the retail Forex world, they just don't do it well, and they do it for compensating for a poor risk management. Okay? So that's why I wouldn't go there. Yeah. Yeah. If it looks bad, get out. That's the best hedge in the world. Put the profit in the bank. That's the best hedge. And you can always get back in. Remind yourself, guys, you can always get back in. There is no fear of missing out. Fear of missing out is for people that don't know what they're doing. If you know what you're doing, you don't have to sweat bullets over that stuff. You'll always get another opportunity to get back in. Always. Okay? Always, always. There's no fear, right? Fear comes from the unknown. But you're a technical, fundamental trader. You do things like read the reports that central banks research and print for you. You go to the IMF website and read the research from all their PhDs and quants that they publish for you. You go to the EIA and IEA and OPEC websites. You go to the BP, You go to the BP website and read there. They give wonderful economic outlooks. Have you ever done that, guys? Once a year, and I think twice a year they publish, but I believe once a year, the CEO of British Petroleum comes out and they do a conference with reporters. They go up on stage and there's a big presentation, the state of the world for demand for oil and production capabilities and how they see the future and future demand levels. And they do all these wonderful charts. You can even download the PowerPoint deck and you can watch the interviews. And then the CEO sits down. You remember this dude makes like $100 trillion a year, right? Working for a publicly traded company. But anyways, he sits down there and he pretends he's upper class, and they do Q&A. And he acts like he's king of the world because he thinks he's king of the world. Why not? He's CEO of British Petroleum, right? So anyways, all this information's out there. There's no fear. Fear is for people that don't know what's going on. But I know you know what's going on. I inspire you to go out and know more. There's limitless amounts of information. There's no fear. You're Illuminati. I need to find my little Illuminati thing. I might have thrown it away. Can you imagine? But you're Illuminati now. Do you understand that? And if you're not there, you're on your way. There's no fear. You're the one enlightened. Fear comes from walking through the dark. And it's scary in the dark. And you start making things up. What if the sky falls? What if there's a cliff in front of me and I don't see it? What if there's a monster in the corner and it eats me up? And it's all in your mind, right? Woo! But you are Illuminati. You don't have fear. There's only knowledge. The truth through knowledge. This is you. And I know you can do this. Whether you're there now or whether you'll be there in 3 years, I know from you and I having a relationship that you will get there. How many people feel that way? That you're either now part of that Illuminati of the Forex world, or you're soon going to be there, whether it's 1 year, 2 years, 3 years, 4 years, 5 years, but you know it's possible. That we can do this together. You don't have to do it alone. I can give you my Harvard education at a bare minimum. I can give you 20 years of experience. Remember, before I was in Forex, I was a venture capitalist, so I bring a little bit to the table. Okay? But there is no fear. You will not have fear. I will teach you never to have fear because you're in total control. You're not in control of the market, but you're in absolute total control of yourself and your trading. You understand that? Hopefully you think about that. The fear of missing out is from people in the dark. And most of the time they're afraid of things that don't even exist. That's not you. And if it's you now, we can fix that. Are you willing to put in 5 years worth of work? Barry says, Wayne, I'm Illuminati. Awesome. I don't doubt that for a second. Are you willing to put in 5 years worth of work? Tell you what, I'll give you a little hint about my meditation over the weekend. I looked at how much it costs to rent a yellow Lamborghini, and not a Gallardo. Maybe an Aventador. They're pretty nice. Get the Spider with the convertible. Not for me to drive around. But I want it put into a conference room where you and I meet. And we as a group of Illuminati talk about the big, fun, crazy, awesome stuff about Forex and really the financial world. It's not just Forex. And we work how to we work on your strategy for your hedge fund. And just over in the corner of the room, there's a yellow Lamborghini sitting there, just because it's funny as hell. Just because it's an inside joke. Like, that's what the suckers are going for. And we're here creating strategies on how to predict and profit from the prediction of the future, right? So anyways, that's why I'm like, we need to have that. I even told my wife, like, I want to rent a hotel room. I want to get my team together. We go in the room. I want us to talk about the big things, not just 5-8 crosses, the big things. And I want a yellow Lamborghini. You know what I mean? Because it would just be so much fun. You walk in, you're like, oh, snap. Well, the idea is, I think it's a joke. Why yellow? I made it up years ago, guys, if you're newer, that amateurs want to get rich quick and drive a yellow Lamborghini because they think it'll I don't know, make them popular. Women will want to be with them. Men will want to be them. All because they drive this car. Of course, it's a fool's dream. And really a dream of poverty. But I think we're bigger than that. When we're talking about building businesses that add value to the world, right? Because of our research and our capabilities, you know, like we're talking about big things. We're talking about changing the world. We're not talking about the car you drive. Who cares about your car? So I think it's funny. I walk in and like, this is the dream that many, many people have in the YouTube Forex world, right? They're like, oh, if I could only drive a yellow Lamborghini, then I'd be a real man. Like, dude, you're a boy, right? Come on, that's your dream, your car. Your car is your dream. Right? Look, oh, if I have a Rolex one day, I'll be a real man. Dude, it sits in my drawer half the time. There's such silly dreams. Why don't we change the world? Why don't we, right? Let's do the big things. Right? You know what I mean? Yeah, oh yeah. Hope is like, oh yeah, you were scaring me before. No, it's funny to walk in and like, that's what I used to think of, and this is what I have. And what I have is a bajillion times more important than that. Okay? Right? It's like your watch. It doesn't matter. Your car, it doesn't matter. And by the way, your car is the dumbest investment. You know what I mean? Let's say you have $1 million cash in the bank and you have a $300,000 Ferrari or Lamborghini or whatever you want to drive, and that's in your driveway. You'd be an idiot. 30% of your net worth on a car that's guaranteed to lose money, you're stupid. So why don't we figure out how to put $10 million in your bank? But that's, you know, you need like $5 million just to retire. And 60% of Americans, whatever your number is, some people probably their target's more like 2 million. I think if you're middle class, you're going to need about 5 million to retire. 60% of Americans don't have it. They won't get it the rest of their life. They won't get it. 60% of Americans don't even have that. So until you squirrel away that, there's no way you should even think about buying a car beyond, I don't know, whatever. I mean, like, throw away. But anyways, we're getting way up in the weeds here. But it's not, if that's what you're dreaming about, you don't even get it. And that's the problem, right? You don't get it. I will have to teach you how to think rich. So anyways, so that's why I wanted the yellow Lamborghini. It's the false idol. It's the false idol. And we should be strong enough to walk in and just laugh at that and take selfies. Look, now you'll like me on Instagram because there's a yellow Lamborghini next to, I mean, it's, right? It's so funny. Now, if you own, how about this, Ruben? You own a $5 million apartment building and it generates net operating income of $300,000. Okay? But you still have to account, NOI doesn't account for financing. And you finance the thing. So you put $1 million that you pulled out of your Forex account and you leveraged it up 5 to 1 because it's a commercial property. So now you own a $5 million apartment building and all this rent is coming in. You pay you pay for all the expenses. You know, you collect all the rent, pay all your expenses. That's your net operating income. Now you got to pay for your financing. And let's say after the end of it, let's say you have $150,000. You make $150,000 a year doing nothing. But remember, you only put up $1 million. How long until you get to break even, guys? You see what I mean? It's a little more than that, Ed, but we can go with that. Ed says 5. Well, what you do is in 5 years, right? That's 750,000 or something like that. But let's say also in the 5 years, the value of the property has gone up 10%. So now you certainly can pull 500,000 out and put it in your pocket. Plus you made 500,000, more than 500,000. So now you have no money in it, right? You see what I mean? Now you have no money in it. With the higher leverage level, you're now only making $100,000 a year. But you have zero money in the investment, and it'll pay you $100,000 a year for the rest of your life, and it'll probably continue to go up in value $1 million every 10 years. So you say, well, in 10 years I'll have the million plus the from the rent plus the million in appreciation. So now in 10 years you're guaranteeing yourself $2 million. And you have no money in the project anymore. Now go buy yourself a yellow Lamborghini, son. Feel good about yourself. You have a $5 million property that's now worth $6 million, and you have no money in it, and you pay yourself $10,000 a month forever. And then when you're an old man and your yellow Lamborghini is now worthless, looks like a piece of junk, you sell that property for $20 million and you retire an old man and you play shuffleboard and you go on cruises, right? And you go to dances and you play bingo and you get very serious about watching the Weather Channel all day. But you got 20M stuck in the bank. Yeah. Okay, but whatever. There's an example. You'd have to be insane to pull $300,000 out of your Forex trading account and buy a car that's guaranteed to lose money. Yet you're making 30, 50, 60, 80% a year in your Forex account. You'd pull that out to buy a car? Are you mentally deranged? You don't understand finance. Money makes money, so you make your money buy it for you. But you don't take money out and spend money. You know what I mean? That's what poor people do, spend money. So don't think that way, guys. All right. Enough said. MoveOn.com. All right, cool. As you can see, right at the central pivot point, the Japanese yen is now stronger than the Swiss franc. Game on. What do I mean about game on? Let's take a look. Here's the trade plan from Friday. I'm sure you're paying attention. We had the down, 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 up, up, sell it around 121 for a further down, down. We did this Friday of last week. I sold it Monday off the 4-hour 21 daily 5 EMA off of our roll reversal on the weekly central pivot, like we said last week, and I am now making money. Hey, yay, 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 yay. That's how you do it, brah. JT Smooth. Yes, Trader's Way is the sponsor. Please open a demo account today, JT. Cool, right? TBM got it. You guys did it, right? Reb's buying ETFs and REITs and stuff. Yeah, I want you guys to think of it this way. I want you to be truly your own hedge fund manager. I want you to use all the benefits of Forex, and there are many. Things like leverage and mark-to-market and stuff like that, right? I want you to take that money you make here and then start buying other types of assets with your Forex money. Okay, I want you to buy income-producing real estate. Not a second home. Don't own 5 houses. That's stupid. That's just dumb. Doesn't make any sense. Let's say you buy a $500,000 house. What's the monthly rent? Make up whatever number. How many renters are paying you? 1? You have 1 renter. You're going to drop $500,000 for the opportunity of mowing the lawn and insuring a house and replacing the windows and the roof and all that kind of stuff and replacing the carpet and painting the walls. What are you? You're like a servant to a king. Mow my lawn, paint my walls. I want a new carpet. Toilet's clogged. Come over here and fix it. And you're going to jack $500,000 into this? Now, how much money? Like, what's your profit? What do you make? $200 a month? You're going to pony up $500,000 and make what, $1,000 a month? Like, I don't know what it is, but $1,000 a month? That's stupid. Right? So let's say it was 10 times bigger, like I was saying before. Instead of 500,000, it's 5 million. But you might get a property, right? You might get a property with 100 doors on it. or 50 doors, not 10. It's 10 times more money, but it's not like you own 10 houses for 5 million. You own one building with one lawn, one roof, right? You can hire someone to manage it, and instead of 10 doors, you get 30 doors, 50 doors. Yeah, I mean, come on, man. But anyways, or you buy bonds, or you invest in the stock market, or eventually I want you to get really good at all these things, because what we're predicting is everything. You understand that that's what macro means? That's what macro means. Everything. The big stuff. I'm not sweating bullets on which REIT you should buy. That's microeconomics. But if you can predict the entire stock market's going to go up or the entire stock market's going to go down, right? Then you can diversify. So make your money here, pull some out, but don't spend it. Don't buy a boat. Don't buy a watch. Don't buy a car. Right? Put it in something else that requires no work from you, and yet you'll make money. Because what you want to do, like let's say you haven't quit your job yet. We need you to quit your job. And then you're going to do this for the next 10 or 20 years. But at some point, we want Forex to be it's always your risk capital, so to speak. But wouldn't it be great if you had a portfolio off to the side that's generating, I don't know what your number is, but let's say $10,000 a month. Okay? It could just be a corporate bond portfolio. Okay? And it just makes this money for you. And now how would you feel if you were completely independent of the need for money? Because you always had that coming in. Now what people screw up is they buy a house 10 times bigger than their old house. They buy a car 10 times more expensive than their other car. And then they need a boat, and then they need to travel. And they're just burning their cash. They're just setting it on fire. Have you met anyone that lived a life like that, and then they got a little bit old and they're dead broke? So what we need to do is set all that aside, and you own something. See, in the Western world, in particular in America, there are people that own, and then there are people that have jobs. And there's two taxation systems, right? There's one for the wealthy people that own things. They own businesses. They own portfolios, right? But they own trusts. And then there's everyone else that has a job. And the people that have a job, they have to pay lots and lots and lots in taxes. Lots. They pay tons in taxes. Wealthy people, they don't have to. Okay? Because they don't have to work. They don't earn a salary. Okay? Is that cool? You know, if you had $300,000 in the stock market this year, you would have made $100,000. Cool. Hopefully you had a hell of a lot more than that. So anyways, I want you to think about that. This is your ability to fund something. When you get to the point where you have more than enough and you're like, you want to contribute to the building of a children's hospital in your town, that's what Forex is for. Make your money, boom, donate it to charity. Okay? So anyways, that's the whole joke about the yellow Lamborghini. It's like the dumbest thing ever. And we know that. We're above that. We're here to change the world. So, anyways, let's get back to the hard stuff. Down, 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 up to the 21 EMA, the psychological of 121, 0000, roll reversal, central pivot point. Like we said last week, sell it. Very complicated stuff. Not. Okay? Now we're here. Let it run. Cool. Taking a look at this, pound yen. Did not make the lower low. That's very disconcerting. Very, very disconcerting. I need this to drop now. Okay. I'm short at 44. We're at 42. So now I'm only up 200 pips. See, short at 44. We're at 42. So now I'm only up 200 pips. So I need this to now kick down. Okay. So I might want to then drop into a smaller time frame and plan this out. Okay. And we're a little high. Looks like an inside week, or sorry, inside day, S1, R1. So these are the old pivots. I want the new pivots that predict tomorrow. So I will do this. And I'll even say I'm a bear, so I'll do this. Oops, clicked the wrong one. Sorry, that's bull. Bear. And tomorrow I want to be short around 142.23 to 141.80. So basically what I need here is to use some technical analysis as well and get a down, 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 up, up, sell, down, 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 up, up, sell scenario. And if I can get that at this price, we should be good to go the rest of the week. Yes, I would be paying swap on this, yeah, which is like hardly anything, but yes. So you could say, like, put it this way, Mark. I was up 300 pips on this trade, but it cost me 9 pips in swap. Pro Trader says, why don't you consider that a double bottom reversal? Well, I could, and it really comes down to the time frame that you're looking at. Okay. 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 So we'll see if I can get this, this, I'll feel really good about myself. But Pro Trader, you totally could. The difference is really the time frame. Okay. On a 15-minute chart for show, but maybe on a different time frame, I might not want that, right? So I'm looking at it this way right now. Sell it as long as I'm below, let's say 42.50. I'm all right. Does that make sense? Coolio. This one hasn't risen as much as I need it to rise, so I can't sell it down here. Okay. So as I indicated last week, this one, I need to do this. Okay. So it's not quite there. It made it to just above 72. I need 72.50 before I get all giddy and squishy inside, okay? So we're still down here. So as you can see, I sold at 76.50, 76.45, basically 76.50. We're at 74.90, so 75. So this is still up 150 pips, but it hasn't given me an opportunity to re-enter. So the pound yen is the same trade as the Aussie yen, but the pound yen I was up 300 pips, now only 200 pips. This one is 150 pips, but hasn't really had the volatility. Interesting, huh? So it's been up and down, up and down, up and down. Never mentions a world addiction in perfect company. So we did Swissies and stuff and yens. I guess we'll just do the regular setup and then call it a day. So this one we did, this one we did. CAD yen we didn't do. Remember, I stayed away from kitty CAD because of the issue with oil. So let's just go to oil. Brent hit $70 today during the European session. I'm sure you already know that. So here we are at 65, right? The dip is down here, and the 21 is down there. So if you're a bull and you're aggressive, you should probably buy a 5-8 cross off of the 21. That often takes 8 hours. So if we drop down to 62.5, or maybe even 63. So if this drops down to $63 a barrel, you might want to do the next 5-8 cross up here. Now on this time frame, it's saying be cautious. We're dropping down to the fair market value. Notice the fair market value is 63. Now, when you hit fair market value, there's no entry. It doesn't tell you to go long or short because that's the fair market value. You don't know who's going to take over. Now, as a bull, you're going to assume you're going to take over, right? So you would look for maybe a 5-8 cross up here, but you could even wait for a 5-8 cross, or sorry, a 21.55 cross up. Okay, if you want to be really conservative. Or you can do it here. On a 5-minute chart, trade the 21.55 cross up. So imagine like you're trading this 5-minute chart, okay? On Friday, you bought it, right? Today, you took profit, and now maybe you're waiting to buy it again on the next 21.55 cross up. So in that case, you'd be looking at, oops, you'd be scoping out your chart like this, and you wouldn't even be trading the 5-8 really. Okay, so you trade the 21.55 cross up after a bounce on the 4-hour 21. You understand why that's working? Or you can then shift to daily pivots, for example, and see if they're helpful. So we're bulls. Today it says the bullish buy zone is 62.50 really, 62.60 to 62. So 62.5 to 62 is what, but remember you're supposed to have done that on Friday, so you would have bought it here anyways. So now today we're looking at 63.25 is your plausible buy zone. Remember, this is a guesstimate, so it jumps around by the end of the day, it'll lock in. So I'm still pretty good. I'm pretty confident with the 63 number. And maybe it does this, this, and then on the 5-minute chart, after a rejection of the 63 area, trade the 21.55 cross up to tomorrow's projected high of, I guess that's it there, 65.13. So you'd be buying it at 63 with tomorrow's target of 65. Okay. And then you're going to look at it from a weekly point of view. I guess we can just do it that way. Take a weekly point of view here and say the plan for the week is get in around 62.5, so not far from today, and then 66 is the top. So the weekly trade is this. I guess we can have that as a plan B. Okay. And then lastly, we'll look at gold. Gold has made it through the range. So now, if I were me, I would buy a dip somewhere around, I don't know what you want to call it. Let's throw this up, take a look at it. We're at 72. How about 50? So now I'll get a heads up at 1550. And then that would then roll reverse up. Okay. Look, it's OOP, so you got to be careful. Lim says, what do you think of the impeachment trial? It's politics. It's pointless. The Senate is not going to impeach him. So it doesn't matter to me. I'm more interested in November. But again, my analysis, or my unbiased analysis as a Canadian of the American election, is that the Democrats just don't have it. They just don't have enough to win. They just don't have it. They don't have anyone good enough, not even to beat Trump. And that's pretty sad. So what that means to me is the market's going to move later this year. Cool. I'm good with that. So anyways, guys, that was a day. I don't know how long the webinar was, but it was a real webinar. So I'm good with that. I look forward to seeing you tomorrow. Would you please take a moment to click the like button? Okay, less than half of you have taken that opportunity. Also, if you have not left a testimonial on Friday's webinar, please do so. And by testimonial, I mean if I had a positive impact on you or your trading in 2019, would you please take an opportunity and document that there on Friday, January 3rd's webinar? I think there are 47 testimonials there now. Maybe go and read them. But I'd like to know if I have had a positive impact on you or your trading. So if you could take an opportunity to document that on Friday's video, I would appreciate that. And if you want, I could probably get you a link. I might have a link open. No, I don't. Friday's video. Okay? I'd like you to document it on Friday's video. And for those that did it, I thank you. I read it, and I appreciate everything that you said, and I appreciate the success that you're starting to gain. And I'm not joking. I printed them out, and I gave them to my mother. And my mother read every single post that you made on Friday's videos. So thank you for that. So, peace on earth. May the pips be with you. May our profits be above average. And make sure you take the opportunity to visit tradersway.com. Open up an account, guys. Get that demo going. Download MT4 and use it to practice to become a better currency trader the way I teach you. Okay? Peace.